According to the SOM rule, the early stages of a recession is signaled when the 3-month moving average of the U.S. unemployment rate is half a percentage point or more above the lowest 3-month moving average unemployment rate over the previous 12 months, which is exactly what we are seeing. The real-time SOM rule recession indicator is indicating that the U.S. is about to go into recession and actually has entered a recession. Alongside this, it has a 100% accuracy rate. It has never been wrong. It has never missed. Alongside Japanese banks potentially collapsing, that is going to affect our stock markets, bringing volatility in, higher borrowing costs, more expensive reports, and will impact the U.S. agriculture. Now, alongside all this, I asked ChatGPT basically the outlook on the market, and you're going to want to stick around for what it had to say. Without further ado, guys, if you're not subscribed to the channel already, join the family, hit that subscribe button, turn post notifications on, make sure to like the video. I have also been talking about a major S&P 500 trade that we are going to be taking in Discord, and I will be covering that exact trade in today's video, so if you don't want to miss that, watch this through. Okay, according to ChatGPT, indicators that the US stock market might crash include weak economic data, poor GDP growth, high unemployment, and lower consumer confidence. Well, if we come down, how do we check if economic data is actually weak? First things first, GDP growth, is it slowing? Yes, GDP growth in the United States slowed in the first quarter of 2024. Okay, not too good. Unemployment rate, is it rising? Consumer confidence, is it low? Inflation, is it high or fluctuating? The unemployment rate in the United States was rising in July 2024, increasing from 4.1% in June to 4.3%. July, the index rose from 100.3 from 97.8 in June, with the present situation index declining to 133.6 from 135.3, and the expectation index improving to 78.2 from 72.8. However, the expectations index was still below 80, which is a threshold that usually signals a impending recession. And last but not least, as of June 2024, the inflation rate was 3%, which was a 3% increase from the previous year, but still below its peak. GDP growth slowing, unemployment rate rising, consumer confidence low, inflation high or fluctuating. All of these checked off the box. We can say that weak economic data is absolutely here. Next up, high valuations. The US stock market as of 2024, August 1st, is overvalued by 102 to 168% depending on the indicator. This is up from the previous month's range of 98% to 162%. In other words, several different indicators impend that at minimum, the stock market is overvalued by over 102%, and we have seen that in stocks recently trading way out of their peg. So overpriced stocks relative to historical changes? Absolutely. Check 1, check 2. Number 3, rising interest rates. As of August 8th, 2024, the Federal Reserve's interest rate is 5.5%, the highest it's been in 22 years. Check that off the box, rising interest rates. Number 4, inverted yield curve. Yes, the U.S. Treasury yield curve was still inverted as of late 2023 and continues to be inverted. Geopolitical uncertainty. Do I really have to bring this up? War, the Olympics, the election. I'll leave it at that. Extreme market sentiment. In other words, excessive optimism or pessimism among investors. Absolutely. The market is in extreme fear over here according to the Fear and Greed Index, and we also saw that the VIX rose to heights, the same heights of 2008, which measures the volatility in the overall market. Last but not least, disappointing corporate earnings is the only one that you can kind of say is a miss. 78% of S&P 500 companies have reported positive EPS surprise, and 59% of S&P 500 companies have reported a positive revenue surprise. Now, this could just be from inflated numbers, or maybe not. But if you have 6 reasons the market's going to crash and 1 reason it's not, you may want to lean towards it's going to crash. Now, nothing I say is financial advice. I'm not a financial advisor. I'm just a guy on YouTube. But if you're liking the video so far, make sure to hit that like button. The S&P 500 came all the way back up to 533. You can see that right here on the 4-hour chart, trading in this channel. Now, what is this big trade that I am talking about? I am talking about the neckline at 543 on the S&P 500. Why is that level so important? Well, let's jump from the 4-hour to the weekly time frame. What you can see right now is several different times the S&P 500 has corrected and came back up to this neckline. Right after it broke this neckline, the previous correction, you saw a very, very strong market coming up to all-time highs all the way up to 524 from the neckline at around 452. Previously, before that, we got rejected at the neckline going from 460 all the way down to about 350. One before that, rejected off the neckline, came down from 322.40 to about 298, and then ended up going higher. Same thing, rejected off of the neckline, right around 280, came all the way down to about 235. And we can continue to scale further than that. Jumping into the daily time frame, what is confirmation? Well, previously, we can see that there was nearly, if not a candle close above the neckline, and the SPY still ended up falling, so it was a fake out. You can see almost the same thing back here as well, almost a fake out above the neckline. Once again, almost an entire candle above the neckline and fake to the downside, and bang, a couple of fake outs right here, 1, 2, 3, or you could just drag that neckline a little bit higher. But overall, what are we waiting for? Jumping back to the 4-hour time frame, we're waiting for not only a test on 543, not only a close above 543, but a full candle to be built above 543 as confirmation. After that, going basically balls deep in call contracts on the S&P 500 and or put contracts. Now, if we get a rejection at 543 and get a couple of candle closes breaking back under 538, a full candle close under 538, balls deep in puts. This is just what I'm doing. It's personal. And if you're in Discord, and some Discord members may or may not follow, some YouTube members may or may not follow, but if you're watching the YouTube, why aren't you in the Discord? It's only a coffee a month. Overall, I'm looking at September 20 expiration. This is also, I believe, it may potentially be the quad witching day where tons of options expire. This is the trade that I am eyeing up. This is the trade that I am lining up. And based on everything, we are looking like we are heading towards a crash. However, there are a couple of things that say otherwise. Obviously, the VIX coming down very fast. Also, Bitcoin. We had this drawn out on Bitcoin and it's playing out exactly to a T. But what else could you see? Let me remove that. The other thing that you could see on Bitcoin that actually points us very bullish is about a 3-month cup and handle building on Bitcoin, meaning off of this handle, you're about to see a nasty move to the upside. Now, what happens with that? The market is likely to follow what Bitcoin does. However, Bitcoin is at crucial levels that can get rejected, and I think into late September, late October, Bitcoin could still sell off, forming this handle all the way back down to a $975 billion market cap before cruising higher. In my opinion, if the market is going to crash, it's going to happen now into October, and election time, November, is going to fix it and prop the market back up. That is what I have been calling for. Overall, hopefully you guys are enjoying your weekend. I need to talk about a couple extra things before we close out the video. A coalition of major financial entities, including Bank of America Securities, Charles Schwab, Citadel, E-Trade, Fidelity, Morgan Stanley, TD Ameritrade, UBS, Virtu, BlackRock, Citigroup, JP Morgan, Goldman Sachs, Wells Fargo, Jane Street Capital, and Blue Ocean have all launched MEMX, their own securities exchange, and coincidentally, many of these companies experienced outages on Monday. Blue Ocean, the leading 24-hour broker in the US, has shut down trading until August 16th, which many people have conspiracies on AMC and GameStop, and what is happening with that is not for this video. Foreign buyers are fleeing the US housing market with sales at a record low, and last but not least, Jim Cramer says to vote for Donald Trump if you care about your paycheck. In quotes, if you're in the stock market, if you care about your paycheck, you go with Trump. What do you guys think about this in the comments down below? Overall, that is what I got for you guys for today's video. Make sure to like the video on the way out and join the Discord. It is the third link under the video. I'm in there so you can come talk with me. You can come talk with the most amazing people, stocks, as well as crypto all day long. We have options trading alerts in there. I post my trades as soon as I take them. Overall, best vibes. There are no bad questions, and it is only a coffee a month. You guys will not regret it. It is a deal. It is a steal in my opinion. And the second link under the video is for Moomoo, where you can earn up to 8.1% APY on your cash that is sitting in your account, as well as earn 20 free stocks. All you have to do, open an account through my link. It's free, and make a deposit into your account. I don't care how much, you will start earning free stocks from them. They're also giving you level 2 order book data for free, access to trading options, going long, going short, viewing other exchanges, and more, all for free. So go to that, guys. Last but not least, the top link under the video is for my custom indicator, pattern detection, and forecasting. If you don't have it yet, go get the free trial for 14 days. Try it out. If you like it, then keep it. That is it. Those links are under the video. I love you. Peace.